Good morning, ladies and gentlemen. I would like to welcome you at the conference that is dedicated to the financial results of PKP Cargo Group for Q3 2020. We continue to face epidemic restrictions. Therefore, this is the third meeting that we have in the online format. In May, we organized the first conference of this type, but it seemed that the COVID-19 pandemic will actually disappear fairly fast. But the reality is much tougher, and lockdown had a huge impact on the economy and the transportation sector. Well, the curtailed economic activity of the country and the shutdown of many industrial sectors contributed to the curtailment of freight turnover. That was coupled with the declining demand for electricity in Q2, which generated less demand for coal from the power sector. And as a result, there was less demand for the rail freight for cargo companies. In Q3, PKP Cargo Group started to rebound and cover up the losses caused by the pandemic. I will discuss the financials shortly, but our revenue for Q3 was over 1 billion zloty. Our EBITDA was almost twice as high than in first 6 months of this year, and we were able to show positive performance across the board. Q3 was a good quarter of the year in terms of the tonnage and overall TKMs. And we also optimized our costs. This is the mid Q4 when we meet, and I may say that we continue to keep positive rail freight trend despite the high second wave of the coronavirus. The sanitary restrictions that affect the economy this time have lesser impact on the industry, that is our main customer. For that reason, the railway industry continues to show better performance from month to month, although we are still striving to live up to the level of 2019. However, the prospects for the future are getting more optimistic, especially that very soon we are going to have vaccines available on the market, and as a result we should be able to contain the spread of COVID-19, and we will be able to get back to the normalcy, to the situation that we had before the pandemic in the society and in the economy. Performance of PKP Cargo Group reflects the overall macroeconomic situation in the country. We expect the economy to recover, and therefore we forecast the increase in rail freight, the mass and intermodal freight. However, the crisis was a good opportunity to consolidate our operations, and we intend to continue these activities throughout the next quarters. Cost streamlining that we performed over the past few months is the direction to follow in the future. Our aim is to improve the efficiency of PKP Cargo. Now let me turn to the detailed financial results and operational results after 3 quarters of 2020. In terms of the overall revenue, our revenue was at 1,009,000,000.6 in Q3, and we were able to transport 23.9 million tons of freight, and our EBITDA was at 226 million, and EBIT was 36.6 million zlotys. In terms of our situation as compared to the overall market, on slide 5 you will find the breakdown of the market with a number of different operators and their market shares in the market. So first we have the group of carriers that are associated with large industrial groups, and these operators cater exclusively or mostly to their own needs. Then there is an open market, all the other players that focus on intermodal operations, and PKP Cargo. And as you may tell, each of these groups suffered a major decline of TKMs over the 3 quarters of 2020 as compared to the first 3 quarters of 2019. In case of the industrial carriers, it's nearly 5% drop, and for other players, it was respectively 3.4%, and in our case, it was 17.8%. It is very telling to see how these declining market affected different groups of operators in the market. To sum up, I may say that the largest players that have a universal profile continue to suffer major declines throughout Q3, and we are part of this group. As you will be able to see later on, nearly 20% of our TKMs is dedicated to intermodal operations. 3 years ago, it was barely 10%, but nevertheless, we tend to have a fairly universal profile with a trend to evolve towards intermodal operations and eventually a logistic partner. Now, what are the characteristic features of this market? When we look at individual figures that reflect market share of individual operators, we can tell that the market was not homogeneous. Some entities were able to grow their market share. And as I mentioned earlier, the specialized companies that cater to the needs of their own groups, they actually showed either minor or major growth, like Orlen or Coltrans Logistics. They were able to show growth in their cargo rail transport since they were working on the internal orders of the groups. It was not the overall market where they had to compete against other players on equal terms. And the second group of entities that showed growing operations are intermodal operators like CPC Intermodal or others. So this is where we see a major dynamics. And I have to say that the structure of intermodal segment is not big enough to actually reflect the increased TKMs from year to year or quarter on quarter. Although this 20% increase in intermodal operations contributed to the containment of decline for some of the players. Like 18% drop was in line with the average drop experienced by the whole market. Logistic Transport or DB Cargo were able to, they suffered a much greater decline of TKMs on a year-to-year basis. So this is all in terms of the overall market picture and our situation in this context. The COVID pandemic and the climate position curtailed the demand for our services. We've seen the falling demand for coal, and there was an increase in energy imports from neighboring countries. On top of it, the power plants had high coal inventories, and the metallurgical industry showed less demand for coking coal. In case of aggregates and construction materials, we've seen investment completed in 2019. There was a slight recovery in Q3, and as a result, this business contributed to the overall performance. And I think that it deserves more comments in detail because aggregates are an important group in our operations. In Q3, aggregates showed the highest dynamics compared to the past year. I'm not referring to the last quarter, but to the last year. So on a year-to-year basis, we've been able to show increased operations with aggregates. And the same is true for intermodal transport. On the next slide, you should be able to see the detailed TKMs that were dedicated to individual market segments. In case of metals and ores, I have to say that decisions to shut down the blast furnace at ArcelorMittal plant in Kraków affected our business. And then it was also the reduced production in automotive sector and high inventories of scrap metals had a negative impact on our operation. Now, when we look at individual groups, and if we compare the TKMs in Q3, we see that it was overall 10% down compared to Q3 2019. So we are recovering our TKMs after the most acute phase of the COVID crisis and climate policy. But nevertheless, that was the most predominant item in the quarterly structure. Nearly 6 million TKMs compared to 5.3 or 5.8 in Q1. And here I should say that there are two groups that deserve particular attention: aggregates and construction materials, which were 2.6% up on a quarter-to-quarter basis. So TKMs in 2020, in Q3 2020, were higher than in 2019 for the same period. And a similar trend and structure was observed in case of the intermodal transport. However, here we had a much larger increase. It was mostly twice as high, 5.7% on a year-to-year basis, so Q3 to Q3. And also compared to the most recent quarters, so Q2 2020 and also Q1 2020. However, the negative impact during that period came from two other major groups that I described earlier, that is hard coal and declining demand from the industry and from the power sector. As I explained earlier, that was due to the overall lockdown and severe decline in the economic activity across the board. That tremendously impacted our TKMs, although in Q3 we were able to rebound a bit compared to Q2. And metals and ores, again, in Q3 2019, we continued to provide services for ArcelorMittal, but from Q4 last year, this business basically disappeared. So when we run a comparison on a quarter-to-quarter basis or year-to-year basis, this is like 40% of TKMs that we've been missing. So this is these are the main trends for individual cargo groups. And on slide 10, I would like to comment on the main commercial highlights for the past few months, with the main focus on Q3. I think that it's worth to mention that we definitely want to ramp up our commercial policy and commercial activities. We see the first results. In July, we launched a Warsaw-Gdynia-Warsaw operator connection that runs under the new brand Connect Operator. In June, I've already mentioned that we launched the new brand Connect Operator that was developed earlier, but currently we are working to make it more visible. In July, we also signed a contract with the Enea Group for deliveries of coal to the power plants, and the overall value of the contract is 72 million zlotys. Mr. Vasaty was appointed to the position of the management board, and he's responsible for commercial operation. In September, we signed an agreement to set up the intermodal company with LTD Cargo Polska, and this is Lithuania, Poland, Western Europe. So we've had first operations on a pilot basis, and we see a major potential and good prospects for this particular direction. So the North and the Western Europe and also the South. So this is where we see our strategic business partnership. At the end of September, we also signed a major agreement that spans for a period of 3 years, and this is with ArcelorMittal Group. The total value of the contract is estimated at approximately 1 billion zlotys. In October, we won a tender and we signed a contract for the deliveries of coal to PGNiG Termika, and the total ticket is 100 million zlotys. And in October, we also launched the new operator connection of Connect operators from Małaszewicze to other terminals in Poland. And in November, we signed a multi-year agreement with Krajowa Spółka Cukrowa, National Sugar Companies, and this is for deliveries of sugar, 2 million tons for the period of 2021-2030. So each month showed a lot of commercial activities, which translated into tangible results, namely contracts that have been signed during the past few months. Now, moving on to the financial performance. I've already said that in Q3, our revenue at the group level was over 1 billion zlotys, and we were down by 15% on a year-to-year basis. Since the revenue was higher than TKM's, because 10% of TKM's, we were down with TKM's and we were down with revenue, but to a lesser degree. Well, that was mostly caused by the lower unit rates, which were triggered by the highly competitive market environment. However, this situation means that at the operating level, we were able to show 36.6 million zlotys. And I think that I should mention at this point that we felt the impact of the so-called anti-crisis shield that the company was eligible for. So the aid measures offered by the government, and the overall effect of that was 80.6 million zlotys, which positively contributed to our performance. And the management board was working hard to make sure that we should be able to actually be eligible and to receive such support. The profit was lower, but nevertheless, we are happy than the Q3 last year, but we are happy that we were able to stay within the positive territory. So in addition to the increased commercial operations, we were very much taking advantage of this crisis. Mainly, we focused on internal consolidation, improvement, restructuring, cost streamlining, and on slide 13, you may actually see that our group has been very consistent with cost-saving efforts across all expense categories. That has to do with variable costs, but also with the fixed cost base. We are really happy about it because these efforts translated into tangible financial results. So when we start with the employee benefits or energy, access to infrastructure, and traction fuel and other services, I also mentioned the anti-crisis shield that we applied for and qualified for. So we were taking advantage of all the instruments that were made available for the companies, and as a result, we were able to to show profit. It was 50% less than last year, but nevertheless, the revenue from our sales to customers were down by 181 million. Therefore, all other efforts that we pursued offset the declining revenues. So the cost savings measures and also successful application for the support instruments offered by the government. Now, looking at EBITDA, EBITDA was the highest for one year, but nevertheless we were down over 13% compared to last year, 13.7%, 226.9 million. So we were higher than in the first 6 months of 2020, and perhaps it deserves a word of comment because we may refer to our capitalization, 555 million as of yesterday, if we take rolling EBITDA, so that was 580 million. So rolling EBITDA on a year-to-year basis was higher than our capitalization. Therefore, it really shows that we do have a capability to generate high EBITDA with our operations. So this is a testimony of being a stable and robust entity that is actually taking advantage of the crisis situation to consolidate its operations. And I said this consolidation is the direction that we intend to follow. Now, looking at the net results of the group, we were positive overall. We were able to show the net profit at 15.6 million zlotys. Obviously, it has been lower than compared to the last year results, nearly 70% down, but compared to the last 2 quarters where we showed major losses, we can see that we are getting on a recovery path, and we tend to stabilize our operations. And I believe that the next slide that shows main balance sheet items proves that. We may say that the group has a stable balance sheet structure and we do have secured sources of financing. The coverage ratio is safe because we are more or less at the level of 1. We were at 1.01 at the end of 2019. End of September, we were 0.97, so almost at 1. Overall debt is, the total debt is similar to the last year. Last year it was 2.623 billion. End of September 2020, we are at 2.650 billion. So the difference is 27 or 28.6 million. And the overall, total debt ratio is at 0.59, so it shows that we are stable. Now, we do have available funding sources, overall 647 million zlotys, and cash accounted for 378 million. Now, financial ratios, on an accrual basis, we do show losses, but when we look at the EBITDA margin, we can tell that we are recovering and getting close to the last year levels. 19.4 last year, and now we are at 13.9%. Now, to continue our process optimization and consolidation efforts and overall reorganization of the cost structure, we made sure to align our resources to the market demand. And I wanted to show the situation at the end of the quarter. The main item that really impacts our overall operations is the cost of payroll. This is one of the key cost drivers, and this is part of the fixed cost. End of September, our headcount was 5.6% down across the group, and for cargo, it was 5.9% down, so nearly 6%. And the TKMs for September were down by 2.6%. So that really proves that we have a strong focus on improved consolidation and optimization of our operations. This is something that we will continue to focus during the next few months. On slide 18, I would like to show the details of something that I have already highlighted earlier, namely our commercial operations tend to bet on the intermodal transport and across different product groups. But we do have the trend in the market for growing intermodal transport. And intermodal transport is part of our strategy that we've been working on for the last 3 years. As you may tell, during the past 3 years, our TKMs were up by nearly 10% in this particular segment. We want to grow this segment. Today we are at 19.4. This is the share of intermodal transport in total TKMs. We want to grow this segment so that we are more immune to the business cycles of the economy. And we would be less exposed to any turbulence that may be suffered by the heavy industry. We've been very much focused on the heavy industry customers. Now we want to regroup and we want to cater both to the industry and to the overall economy, and we want to develop intermodal freight capability, and eventually our goal is to become a logistic player and not strictly rail freight player. So the last 3 years have been dedicated to such project. We want to continue this fast-paced transformation of the group and PKP Cargo to take advantage of the market trends and to improve our efficiency. Now, the more intense commercial activities and efficient delivery of our strategy is definitely our goal for the next few months and years. And the final slide, which really shows how we are getting more exposure to intermodal segment. PKP Cargo International, the entity of our group, has been quite successful with this transformation process. And we can see how their TKMs have been growing in this segment. After Q3 2020, intermodal operations were higher than last year, and as a result they were able to offset losses suffered in other segments of the market. Because when we look at the total TKMs for Q3, it was slightly lower than after Q3 2019. So we were down at 3.2%. However, the intermodal transport was up substantially, while solid fuels showed a major decline, over 100 million ton kilometers during that period. But intermodal transport was up over 40 million TKMs. So that shows very positive transformation with the successful growth of the intermodal segment. It is getting almost to the 40% of the overall breakdown of the operation of PKP Cargo International, but it actually sets the pathway for the positive product transformation. This is the way we want to follow, and we are going to shoot for this 30 plus 40% share in the operations for the group. So we will communicate about it over the next few months. This is something that we want to highlight in our strategy, and this is where we want to focus over the next few years. So that would be all in terms of the summary of Q3 and the first 3 quarters of 2020. And I hope that I also managed to highlight what we intend to focus on in the future. Thank you for your attention, and I'm ready for your questions. Hello. We have several questions. Piotr is asking if the company is going to apply for other support instruments from the government. If so, to what extent? Well, as of today, our our business operation or freight operations are not highly infected, if you will. I've already said that the current lockdown is affecting mostly a service sector, not the industrial sector. Therefore, the impact of the second wave of the pandemic is fairly limited. Therefore, I think that we are probably not eligible for any further assistance. However, we continue to track all the legal regulations that are adopted in this regard. And if there are any opportunities that emerge, we will definitely try to take advantage of that. However, given our business situation, we do not see ourselves being eligible as of today, but things change very fast, and we will see what happens next. The next question is how the company is going to recover the declining market share. So what is the company doing about it right now? Well, again, I would like to revisit the slides that depicted the market situation and the declining market share. During the past few months, we were able to recover the market share. So here we see the effect of the numbers and not the actual loss of market share. Three main groups of operators: those that are associated with the industrial groups, other group are market players that operate at the free market. They were also losing, or the TKMs were going down. But since we are the largest player in this market, in case of the other groups, their market share was going up and our market share was going down. So we need to be mindful of the basis and the numbers. So we need to look at the overall structure of the business. So what we see is more a statistical effect than the actual decline. But I understand that it deserves further explanation. However, the most important thing is that we do have efficient and profitable operation and stable management. I've already mentioned that we have been very active with our commercial operations. We signed new contracts with Enea, PG&G, and ArcelorMittal. As a result, we are able to develop our portfolio for years to come. Therefore, the enhanced commercial activities bring tangible results. When we look at September, we see that our market shares have recovered. And on top of it, we come up with the new products. For instance, Connect Operator, the new service that we launched. And we believe that it will help us attract new customers and win new contracts. We signed a multi-annual contract with the Polish sugar company for the transportation of sugar. And so all these things that happened over the past few months contribute to the recovery of our market share. We see the first trend on a month-to-month basis. Another question that was quite frequent was Kpex for 2020. Do we have any estimates? Yes. I believe that during the previous conferences, I've already mentioned that this is the ambition of this management board to actually make sure that our Kpex is aligned with EBITDA. Our goal is to be at 0.85 of Kpex to EBITDA, 0.85. So that's the ratio which is going to be a pillar of safe and sound financial management. 2020 both Q1 and Q2 that was under tremendous pressure from COVID and the tremendous slowdown of the global economy and Polish economy, which affected and effectively reduced our EBITDA during the first 6 months of 2020, EBITDA was less than EBITDA for Q1 2030. So it was an extraordinary event. The performance was very much reduced because of the overall situation in the economy at large. Currently, the freight is getting stable, and now the projections are also going forward. To be able to show profits over the next few months, we need to have higher freight capacity. It is our goal to make sure that over the next few months we should be getting close to this ratio of 0.85. So EBITDA to Kpex ratio. There is another interesting question, which is about the entire railway sector. Are there any government initiatives to support railway operators, for instance, to actually waive some fees for the use of infrastructure? Well, as far as the support for railway sector is concerned, we do continue to receive support for the intermodal transport, and this is quite substantial. Well, we also had this anti-crisis shield that was offered by the government. It was open to all the businesses in the economy. Today, another thing that really pops up in my head is photovoltaic funding. This is something that we want to take advantage of. Obviously, this is not only for the railway sector, this is for the large group of entities from different sectors, but this is something that may bring a lot of savings. Our energy cost is very high, and we want to minimize that. We do hope that prices or rates for infrastructure access will be set at the level that would be aligned to the current situation. So there is some support going on, but in terms of strictly dedicated support for the railway sector, whether in terms of infrastructure or energy prices, well, I haven't really heard about that. However, there are programs that were sponsored by the government that are dedicated to various sectors of the economy. And as I said earlier, support for the intermodal transport is something that we take advantage of. Another question is about the overall economy and the entire sector. Is the company involved in the discussion about the evolving energy mix of Poland during the next few years? Is it possible that the company will get access to the funding, to the grants that will be dedicated to this purpose? Well, I have already mentioned photovoltaics installation and zero emissions, which this is something that we have in the government strategy. By 2050, the Polish economy should have zero emissions. And when we hear about the strategies of different energy groups like PGE, they intend to reach that target by 2050. And already in 2030, 50% of electricity will be generated from renewable energy sources. So we take these items of the government policy and we also include them in our on our own strategy. As a matter of fact, we align our business structure and our freight structure to the evolving energy mix. When we looked at the freights after Q3, we see that nearly 20% of overall operations is intermodal transportation, nearly 30% is hard coal. 3 or 4 years ago, we had 10% more dedicated to the hard coal, and intermodal transport was less prominent, or container transport. So we do follow the government policy in the area of the energy, and we take it on into account and include it in our strategy, and we participate in the discussions. But we are fully aware that in the midterm and in the long term, we had to accept that the hard coal contribution will be declining over in our business, their contribution to our business, and the conversion that was set initially was getting slow, so that it didn't show much dynamics. So now we have to keep up, and we have to make sure that we aligned our business to the fact that the hard coal will be declining and there will be less and less hard coal freight. By 2050, basically this line of business may shut down. So this is part of our strategy, and we are really mindful and really responsible about it. There is one more question, and this is about the new legislation about the work time of engine drivers. Lotos mentioned recently that they would suffer a loss of 2 billion TKMs as a result of this legislation. Do you have a similar estimates for PKP cargo? And what would be the impact? It is true that this legislation is being currently debated. It has not been finalized yet. Therefore, it is hard to speak about the impact of this law. However, even if it is adopted, our analysis show that it wouldn't affect our business substantially. Well, thank you so much for your attention. And should you have any detailed questions, I would like to encourage you to also address questions to my colleagues from the management board. We are available to you, and have a good weekend and stay healthy.